All right, folks, let's dive into one of the biggest financial stories of the year. This is a momentous occasion that could have far-reaching implications for the economy and your personal finances. The Federal Reserve is set to make a historic move by cutting interest rates for the first time in 4 years. This decision is not just a routine adjustment, it marks a significant shift in monetary policy. Whether you're a financial whiz or just curious about how this affects you, stick around. We'll break down the complexities and make it easy to understand. I'm breaking down everything you need to know. From the reasons behind the rate cut to its potential impact on various sectors, we've got you covered. First up, let's talk about the uncertainty surrounding the Fed's decision. The financial world is abuzz with speculation and analysis. Traditionally, a 25 basis point cut was expected, but now there's chatter about a potentially larger 50 basis point reduction. Why the sudden shift? What factors are driving this change in expectations? Economists are split on how aggressively the Fed should act to normalize rates. Some argue for a cautious approach, while others believe a more aggressive cut is necessary to counteract economic headwinds. This isn't just about numbers, it's about balancing economic growth with inflation. The Fed has to tread carefully to avoid overheating the economy while still providing enough stimulus to support growth. Next, the Federal Open Market Committee, or FOMC, will release updated economic projections. These projections are crucial for understanding the Fed's outlook on the economy. These include forecasts for unemployment and inflation, as well as the dot plot, a visual representation of each policymaker's rate outlook. This will help us gauge the Fed's future policy direction. This will give us valuable insights into the Fed's future moves. Analysts and investors will be closely watching these projections to adjust their strategies accordingly. Chair Jerome Powell's press conference right after? Yeah, that's going to be scrutinized like a hawk. Every word he says will be dissected for clues about the Fed's next steps. Now, the market is buzzing with anticipation. Investors are on edge, waiting to see how the Fed's decision will impact stocks, bonds, and other assets. Cutting rates is a huge deal, especially since it hasn't happened in 4 years. This move could set the tone for the economy in the coming months. This move aims to sustain economic growth amid global uncertainties and trade tensions. The Fed is trying to provide a buffer against potential economic shocks. Investors are divided on whether it will be a quarter-point or a half-point cut. The size of the cut will signal how concerned the Fed is about the current economic conditions. Recent market volatility, including sharp drops in bond yields, suggests that a more aggressive cut might be on the table. This volatility reflects investor anxiety about the future. Despite some slowdown in job growth, consumer spending is still strong, and the housing market shows signs of stabilization. These factors will influence the Fed's decision. Lower mortgage rates, thanks to anticipated rate cuts, could give the housing sector a much-needed boost. This could make home buying more affordable for many Americans. On a global scale, the Fed's decision will ripple through economies worldwide. Other central banks will be watching closely and may adjust their policies in response. Central banks in Europe and emerging markets are also easing their monetary policies. This global trend towards lower rates reflects widespread economic concerns. A weaker US dollar from lower rates could provide some relief to countries struggling with capital outflows and debt burdens. This could help stabilize global financial markets. In summary, the Fed is walking a tightrope. They need to balance the need for economic stimulus with the risk of stoking inflation. Lower rates can spur borrowing and investment, but could also stoke inflation if not managed carefully. The Fed's challenge is to find the right balance. The Fed's upcoming decision is crucial in steering the economy toward a sustainable growth path. This decision will have long-term implications for the economy. So keep an eye on those headlines, folks, and let's see how this unfolds. The next few days will be critical in understanding the Fed's strategy. Don't forget to like, subscribe, and hit that notification bell for more insights into financial news. Stay tuned for more updates and expert analysis. Until next time, stay informed and stay savvy. Knowledge is power, especially in these uncertain times.